Take advantage of the simple trading strategy to make consistent profits as a trader with cryptocurrency. In this video, I will show you how to make $100 a day trading cryptocurrency. In this video, I will give you basic and advanced informations for traders to make maximum profits at the markets. I will show you how to build a trading strategy. I will share secrets of my personal trading strategy that make me profits. And I will share the most important things about risk management. So let's go straight into the content. First of all, you need three different things. You will need a TradingView account to make your analysis, you will need an exchange to trade cryptocurrencies, and you will need a successful working trading strategy. So TradingView is the best tool to make technical analysis, to customize your chart, check different altcoins and Bitcoin, and where you can use different indicators. Then you need an exchange to trade. In this case, I use BingX. Here you can trade a large variety of different cryptocurrencies and you get up to $5,150 bonus with using my link. You will find the BingX link in the description and you will also find a tutorial where I explain how to open and manage trades on BingX. But of course, you can use the exchange you want to use. One of the best platforms to search for cryptocurrencies is CoinMarketCap. Here you will find all important different cryptocurrencies. Normally the cryptocurrencies are ranked with the market cap, so the highest market cap of all cryptocurrencies has Bitcoin. And for example, Solana is on place 5 of all cryptocurrencies with the 5th highest market cap. But you can also rank the coins for the last 24 hours. And if you're using this, you will find the best performing altcoins. I use CoinMarketCap every day to check the best performing and baddest performing altcoins in the market. And for example, you find different cryptocurrencies that you want to trade. In this case, we use FetchAI. And here you'll find more details about this cryptocurrency. In this case, FetchAI is on place 78 of all different cryptocurrencies, with a market cap of nearly $1 billion. And if you want to have a more detailed view on the chart, you can go here and search for FetchAI. You can select one of these Fetch USDT pairs, for example Binance. And here you will find the chart of FetchAI and analyze the coin. And now we are coming to the most interesting part, the trading strategy. First of all, you need a trading strategy to make consistent profits. You need a strategy that your account would look like this, with higher highs and higher lows, that you win trades and that you always lose trades, but they don't get you into a negative balance. So you need a strategy that will make you profitable over the long term. Of course, you can make every day $100, but it's not important that you have to trade every day, because sometimes you don't get good trades every day. So it's very important to take a trade if you have a good risk-reward ratio, if you have a good chance that the market will go into your direction. I personally like to trade Bitcoin and Ethereum and some altcoins, but at the beginning it's always important to focus on one or two altcoins to master these coins. So I personally would always trade Bitcoin because Bitcoin is the biggest cryptocurrency in the whole space. And if Bitcoin is going into one direction, the chance that the altcoins are also going in the same direction is very high. For example, if Bitcoin is moving to the downside, then it's more risky to take a long position on an altcoin when Bitcoin is going to the downside. I have my own personal trading strategy, but for you as a beginner, it's very important to build a good trading strategy and that you learn how trading works. And these are the most important aspects for beginners to learn how to trade. I will just explain these aspects very simple and briefly, and then I will show you a perfect example trade. The first aspect is the market phase. We have different market phases. For example, this is a downtrend, this is an accumulation, and this is a clear bullish uptrend. So it's very important that you always know in which market phase we are. Then we have the market structure. The market is moving into legs, so we have here higher lows and higher highs. And you always want to trade with the trend, because then you have the highest possibility of a winning trade. In this case, we have a bullish trend and you want to go into long positions. The next aspect are zones. In this example, we built here a higher low, we made a higher high, so we continued the bullish trend. And if the price comes back into this zone was the push into this high, then the chance is high that we can continue the bullish trend. So it's important that you get these zones and that you can trade from the zones into new highs in this bullish example. At last, we have price action and indicators. At the price action, you will look at the candles, how the candles are moving and what different candle patterns you have. And you can also use indicators to get a better technical analysis, but I'm not the biggest fan to overuse different indicators. So now I'll show you the trading strategy in the example from the beginning. First of all, the market phase. As you can see, we are in a strong uptrend. The market is consistently making higher highs and higher lows. So the market phase is bullish and the structure is also bullish because we have higher highs and higher lows. And as you can see, we have this demand zone right here, because from this demand zone, from this consolidation, we saw this move into new highs. We saw this very strong momentum candles to the upside. And if you have a demand zone like this, the chances high that we come back into this demand zone and then continue the bullish trend. And as you can see, we saw this consolidation right here. Then we saw this move again into this demand zone. So with this simple trading strategy, we want to get into this retracement when the retracement turns bullish again and move to the upside. So you want to trade with the trend to the upside. And here you can see that we are on the hourly chart very bullish. And if we are going in a 15-minute chart, you can see that we have this downtrend right here on M15. But then we made a lower low from this zone right here. As you can see, we made this lower low. So we had the break of structure right here. But we are now in this demand zone and the overall trend is bullish. And if we now see a bullish reaction also break this last high, which led to this lower low, then the chances high that we see even higher prices again. And with this break of structure on M15, I get into this trade. So we are now on all time frames bullish on the hourly chart, on the 4-hourly chart, and on M15. And then I put the stop loss just below this last low right here. And you could put your take profit over this highs right here, because the chance that much liquidity is over this high is very high, because people are getting into short positions right here and short the market to the downside. And most people who short the market put their stop loss just over this last high, and liquidity is working like a magnet in the market, and the chances high that we reach this last liquidity. But in this case, we are in a strong uptrend and I use the Fibonacci retracement tool. And in this case, I target the 1.618 Fibonacci level. And as you can see, the trade pumped perfectly to the upside in this level and we had a very successful trade. If you want to have more safety, you can put the stop loss below this zone, because when the market is going again under this low and under this demand zone low, then the chances high that we see even lower prices. But of course, if you have a lower stop loss, the chance that you win more because your risk reward ratio is higher is there. But of course, if you have a smaller stop loss, the chance is also there that you get stopped out and the market is then running to your side. In this case, we have a risk reward ratio of 3.5. So for example, if you have a smaller account and you risk $100 per trade, you would have now made $356. But if you have more capital, you could have risked $1,000. And in this case, you would have won $3,560. So it's very important that you have a strict risk management. In this case, you could always risk the same money amount. And if you have a profitable strategy, you will get a bigger account over the long term. And it's very important, if you want to make consistent profits, that you then compound your wins and build a winning streak to the upside, that you trade consistently and that your account will grow over the long term. And of course, it's very important that you build your own trading strategy and get better every day at trading. And if you want to learn more about trading and get daily updates on the crypto market, then join my free Telegram group. I share there daily updates and signals on the cryptocurrency market and other financial markets, and you will learn more about my trading strategy. And you will get a bonus tip from me. The most important is that you get really consistent at trading. So if you want to make great progress at analyzing the charts, then it's very important that you analyze the same 2 to 3 altcoins every day. For example, Bitcoin, Ethereum, and one altcoin. And if you analyze the coins every day, you will get much better at trading, and the chance is getting higher that you can make $100 a day at crypto or even more. And if you want to see the tutorial where I show you how to open and manage trades at BingX, then click on the video in the credits. So guys, thank you really much for watching. I wish you great profits at trading and see you in the next one.